Okay, good morning, everyone. Well, pretty flat week. Let's go back here to the weekly side post. Um, well, weekly, the only thing yeah, I mean, we ended the week with with this doji candle. But it was a pretty narrow range. Um, I mean, weekly swing is up, Qs are up, IWM is up, but not this side. This swing is still down, and it needs one more higher weekly bar, So I mean, like, because this one, if you look at, okay, where is this? Is still got way back. This is 244.98 high. This one is what we managed 18% off the lows. This one is up 18.3% off the lows after 21% decline. This one was down 25, up 22.4. I mean, we're just literally right there in the middle. And now this one needs one more weekly higher bar for this swing to turn up. So value, I mean, we'll see what happens next week, but I mean, looking at two different time frames, here's the daily time frame, all swings are up. Even the fact, like, sorry, the what happened on Monday, if you look at them here, watch what happened. This is Monday, doji. Tuesday, doji. Wednesday, right here, we had an outside bar. And then what I realized and noticed, you see the swing turn down. And when we ended this session here with the outside bar, and I was like, okay, so looks like we're backing off from 57 now. But then look what happened here. This is when the announcement came, for the Trump with the UK about the trade deal. He just made a full reversal here all the way back to the prior high swing, and the swing turned right back up. You see what happened here on Monday, Tuesday, Wednesday, and then on one Thursday on the Thursday bar, we gapped up, went all the way back up to 57.20. The prior swing high was 5,700, and the swing turned right back up. So I was like, okay, now we had, because you see how it turns red? That's when the swing turns down because we're looking for three lower lows. This is one, two, and three. And then it just went right back up. And then yesterday we ended the day with another inside day. So it's a very narrow range, you know. So these kind of like lower bar ended with a doji, lower bar ended with a doji, and then we had an outside bar here that which basically which made a new low and it took out the high of the previous day. So there was the outside bar, and then we had another higher bar, but the ended with another doji. And now yesterday we had an inside bar. Inside days, I just ignore them. I don't really want to trade them, to be honest. These are very um like these ones are the ones that change swings, basically the outside bars. But these ones are, you know, just a neutral bars. Same, same thing here. So, um, hang on for a second. So the other one, Same thing happened here. And same drill here. You can see three down, inside day, higher bar. But if we look at here, but look at the range is supposed so narrow. Like it was a very kind of choppy little week, you know. It seems like, the futures are up like 300, 400 points, and then by the time market opens, it was just cash session is like 10, 15 point range throughout the whole day. So, just a literally a a theta burn market, to be honest, that last week was. I posted this one yesterday as well. If we This was actually the first weekly doji that we have now for this year. These are the previous ones. These are, like there's one here. So last year we had one, two, three. There's like four, couple of them. These were for last year. Four or five of them. So I mean, if we look at back here in March of 2024, we actually had 2 weeks side by side right there. You see these two weekly doji candles? And then the third week it went up and ended up higher. And then after that so this one right there um, made a lower bar, some sort of a spinning top, whatever you want to call it. This was a doji, ended up with a pretty strong higher bar. This one right there had a pretty sharp reversal to the downside after this one. It's just some sort of like a spinning top doji, whatever you want to call it. A little, they're like six different kinds.
It's called Hanging Man.
Yeah, hanging man or whatever they call it. Go with hanging man, and then it had a pretty sharp reversal here for the next week. You see the size of this one, and then the following week it just and reversing right back up. I mean, look, there's the smart way to trade is to trade in the direction of the swing. You know, that is the smart way to trade the market. Now, if Monday we open lower, that doesn't mean that the swings are going to turn direction, right? But I cannot or nobody can predict each day like how the market will open and how it will trade and how it will end the day, right? But if we take this previous recent decline from peak to trough, we're almost flat for the year. Okay. So I mean S&P is down like I don't know 3% off the year to date. So we're almost flat, which we will look at the data in a second. But the question now is like everybody is like, I understand like whoever wants to start putting hedges on or putting, the bearish bets on it. Everybody's looking for this. Yeah, we just need to come back down here, retest these lows. Well, we don't know that. So we came down 21%. Now we're up 18.3%. Now, where do we have our resistance? We have a resistance here to this previous swing here, to this low and this low. Okay. So you take this low at 56.96 and 57.73. So this is our zone right there. This is what you highlighted. Okay. Now, if you want to call it a fair value gap or whatever you want to call it, I mean, this is where the resistance right now. Okay. I mean, the thing is that this is weekly bars, right? So the weekly bars now, if we take, now this is 1, 2, 3, 4. So a 3 bar is that we need three higher bars. Counting inside bar, this is an inside week, higher bar, higher bar. That turns three. Swing turn up. Now this week we hadn't made another high. That's another higher bar. So now we have four. Now the question is, in order for swing to turn back down, we need three more like this week after week. Okay? Three bars with the lower lows. So meaning that we have exactly basically 3 weeks left in May. So next week we need to take out this low, this low, and then we need to make another low. Then the swing will turn back down. Now here's the thing though. When swing turns up, it will hardly ever reverse back down like this. Basically, you the only way the swing will turn back down if it takes out three bars, previous three bars lows all at once. What I mean by that is this, the same what I just showed you here. 1, 2, 3, three lows, right? 56.34, 55.86, 55.78, three lows. And then one single bar took out this high, this high, this high to the previous swing high. See? So it happens. Now, if you go back here, you don't see these a pretty, I mean, it happens here. It happens here. See? 1, 2, 3, one single bar. So basically what it is like, when you on a wave count, you're counting 1, 2, 3. Here, all you're doing is you're counting number of bars. Okay? You bullish, you're looking for a higher bars because you want price to make higher highs. You bearish, you're looking for price to make lower lows. That's this what it is. I think it is the basic, simple way to trade. If you want to make things like, if you want to put Elliott wave on top of it, it doesn't. The thing is like, you can sit here and make a case of this is a W, this is an X, another Y, this is an A, this is a B, another C. I mean, but you have to look at this way that if we look at a bigger picture, we're we have completed 5 waves of the October 2022 lows. This is a completed 5 waves. Now making a case here of a fourth wave, but then at the same time, this decline here is 21%, you know? So it doesn't putting a 3 here and 4 here. So what do you think is going to come after next? 5, right? If that's the case. But by just looking at them, like, because what happens is like this 21% decline is the largest percentage swing compared to all the previous ones. Fourth wave needs to behave a little better compared to all the previous, higher degrees. So it fourth wave has a relationship with wave two because these are the counter trend moves, right? So you have 5 up, 3 down. Now you have completed 5 waves here, then you have 3 down. But making it 21% compared to 10% here, that's double the size, It's doable, but if you start looking at the wave count, like look at this compared to this. It's huge, you know? So I look at them as a, I mean, if we talk about Elliott is like, okay, so here's five, here's three, here's five. The three, they have another five within the three, another three, another five. So the sequence is like what? Like if we put one here, here's three. Now, I mean, look, nobody's saying that we're just gonna rip right, like we're never gonna back off. Of course we will. They're gonna be down, they're gonna be down sessions, So, but to me, what it looks like this May is gonna hold one way or another, you know, because we had 3 months, like let's show you. If we go back here, we're down for 3 months before in a row. 3 months. Making a case here for May is, in my looking at the whole thing here, I don't think it makes any sense. May should hold up. Now, even the fact we already have a higher bar for the month. So, is it smart to put a hedge on? I can do it next week, but at the same time, what you're trying to do is like you're just fighting upswings across the board. Monthly is up, weekly is up, daily is up. I mean, but you just wanted to sell resistance. If we wanted to look at something that we just want to take advantage of a 50-point drawdown, a 60, 70-point drop on a one single session, that if we do kind of back off, fine, yes, it's going to reward us, it's going to pay us money for sure. But if that is just a very, like, you're just not looking at the bigger picture, you just like focus on just a one single session to see like, okay, I can throw something up on the board, hope for a big down open, and I can just cash it out. But that doesn't change anything. One session is not going to do much, two sessions not going to do much. It can change on a daily time frame, but it's not going to do much on a weekly time frame now, because now we need 3 weeks of lower lows. So that will put us to where? Next week we need to make a new low. Then the following week we have to make a new low, and then the third one. So basically, what you're looking for is the first week just went kind of flat, and then because the month ends on May 30th, which is Friday, so we just need to look. So we're looking for 3 weekly lower lows for swing to turn back down. I mean, with like what we can come up with. You have a guy sitting in a White House telling everyone buy the stocks. Deals are, I don't know. I mean, I know they're meeting in Switzerland today to start the talk. And first it was 145%, now it's down to 80%. He's leaving some room there because he knows that he can come down. That's the part of negotiation. You can never go back up. So they will eventually, I'm pretty sure they will meet somewhere in the middle. I don't know what China will demand and what US is. And his thing is like China should open up his markets because they want to sell everything to us, but they don't let nobody come to their market because they want to control everything. So I don't know. I mean, we'll see what ideal can take years. Oh, I don't know about that part. That just kind of, I don't know. What kind of a statement is that, that the deal is going to take 3 years? I mean, a person can get to the moon in like 1 week. I don't know, kind of a, I mean, they'll make it one way or another. It's gonna take some time, but market just like loving these news, as you can see. The minute some trade news comes out, I mean, market just starts screaming to the upside. right away. So the question is that can can we just put a hedge here? I mean, we can do that, trying to target a low. I was thinking about it yesterday, then I was like, I'm gonna just put something, but at the same time, inside there, just I was like, just gotta back off. Um, I don't. I mean, everywhere I mean, if we look at the screen here, it's just not to the semis. The These mean reversion signals are just unbelievable, to be honest. The way they're playing out. I mean, yeah, we have quite a bit of resistance coming up. I mean, if we look at the IWM, here's a VWAP coming here at 209 and 213. There's two of them sitting here. Okay. This one is sitting right at the VWAP around the 414. And then the next one up is 420. So you have this pocket zone here, air pocket right there between two VWAPs. This one right there already managed to close a little bit above the VWAP off the highs. This is the one goes from the previous swing low. I need to delete that one. So off the highs, the one is at 485. And now this one right there, I actually had I managed to put a VWAP on this one, but you can't. You cannot do it on a cash because there's no volume bars here on this one either. Yeah, it's right there. So the point is like right in the middle, are we just gonna go right back up like this? If we do, well, that would be a full V-shape recovery, you know? Or we're just gonna come back because your 5 MA, which is the moving average, is sitting at 55. Okay. That's what I was if I have to put a bet thinking like, okay, because I really want to sell, I would just target this for now. Just for the price to come back and retest the, 5 MA. This one right there, 469 on the Qs. I mean, if the price managed to close below the 5 MA, yeah, then that's just a different thing. But for this, we just need a bit of a spike in volatility as well. So here's a 193 on this one, and this one is a 403. But this guy is struggling compared to the other three. So
Yes.
basically, next week it needs another higher bar for this swing to turn back up. So this is gonna match all four of them. This one is lagging behind. So I mean, looking at this, I've never seen these weekly signals that I've spent so much time making those, and this one was this one failed. It managed up and then just came back up. But these ones held really good, so not everything is
Can
gonna
you
be perfect,
can
but
you can you flip it to SPY?
huh?
Can you show SPY instead of SPX to see the VWAP for SPY?
Oh, you're gonna change it to the spy is 548 on this one. I deleted this one, hang on. And then it's 550. So what I'm saying is, but at 564, if the market managed to make a dip to the downside, I think this will be the minimum retest of this moving average, this 548, 550 area. We're already above the VWAP, and we're above the, oh, this is a weekly, sorry. We haven't even tested the 200 EMA on the weekly time frame, as a matter of fact, with this dip. It came close, but it didn't even test it. Sitting right there, 476. It's not. I look. I understand this. What happened here, and that people lost money, and you know, but it's just the pot. I don't know. I mean, I see a plenty of upside in the market, to be honest. I do. Things are not horrible or just, I mean, I understand there's some there's the recession can trigger because this can happen, that can happen. It's just, I don't know, that just if you really sit back and just ignore everything out there and just look at the screen, what the price is telling you. And if you start sitting and just analyze everything, it's just gonna open your eyes just way different. Like just like I understand it's like the price can come back down. There's no such thing as gonna go up in a straight line. We all know that. Same thing where nothing's gonna come back down for, um, it's gonna be keep falling forever. But but if we look at here, where we at? We're at 3.77% year to date, which is down, right? Last quarter we're down 4.59. This quarter we're up so far 0.48. We still have 3 weeks left in this month, and we have another month to go. Okay, for the Q2. But the only stocks that are up right now is Netflix. Microsoft barely made it after 6, 7 months, as like even more than that, probably like 10 months since last July. Just literally been sideways, you know? Here you have a 4% upside here and 1%. This is Meta is almost flat. Everything else is down. Have you down 3%? Okay, we'll call it 4% year to date. I don't know. I mean, if you ask me, I mean, we're in May. Next month will be June. That'll be 6 months. That's half the year is gonna be half the year is gone. So if we're half the month after half if half the year is gone, and if we're just like sitting here in the middle of this decline that we just had for the year, I don't know. We might just end the year sideways, flat. Because the thing is this, that 22% rally, 22% rally. Are we expecting another 22 to the upside? You have to think that way. So basically, you saying that market is gonna jump 3 years in a row for 20% upside, but this upside right there is a 2 years worth of return in a one single year. S&P has an average of 10% return from the last 50 plus years. Okay. The previous 2 years, it was double. I can show you this thing here. Where's my, here. What do you see here? 3 years annual rate of return, 12%. 5 years annual rate of return, 14%. If you just simply put money in SPY for the next 3 years, you're getting 10% return on your money every year. It's each year. Last year, look, 23.31, 24.23%, 23, 2003 and sorry, 2023 and 2024. Look how market is rallying to the upside. Look, 2019, 16, 26.89. 2022 was, close to 20%. That, that's what we had the bear market. Look how market is coming back. The bet that you're making right now, you think you saying that we're ready for another 20% jump this year? Half the year is gone. Sorry, it will be gone next month. I mean, this can take only 2 sessions just to break even. So then you expect that 20% rally for the next 6 months, for the next 2 quarters? I don't know. I'm sure it can happen. Of course it can happen. The guy who's sitting in a White House, this what he loves to do is he wants the market to just rip higher. He's gonna push it one way or another. I mean, it's this call. I mean, I don't want to sound political or whatever. I mean, call him whatever you want to call him, but that guy is ruthless, man. I wouldn't bet against him, to be honest. I would not. I mean, to me, I mean, I'm just looking at everything during the day and over the weekends, and it's just when everything is quiet and just read the data and just trying to see, like, I don't know. I mean, to me, it looks like we're just gonna have a flat year. And we're just gonna, I think this year is all about dip buying on good quality names. And those dips that you're buying this year will reward you next year. Let's look at the top 50 stocks. These are the leaders. Remember, I always talk about 50 club. This is a 50 club here. Look right there how these stocks are year to date, what they're doing. Start from the top. Tesla, 26%. United Healthcare, 25. Merck, 24. Thermo Fisher, 22. 2019. I mean, yeah, I mean, fine. Okay, what is up? Philip Morris, 41%. GE, 28. Netflix, Abbott, Berkshire Hathaway, 13. Coke, Visa, Costco up 10. Verizon. But these are just, they're not that big of a gain. Like, okay, Meta is almost 1. Wells Fargo, 3. AbbVie, 3.88. Microsoft just turned around after earnings. JP Morgan 5, Johnson 6. But look how many stocks are down. These stocks, I mean, which are the ones that has to turn around to, this is one. This is the one has to help the healthcare sector big time because it has so much weight to it. Here's Apple, 20%. Here's Google, 20%. Salesforce is a Dow 30 stock. Here's you have an AMD right there, 14.86%. Here you have Nvidia, 13%. Here's Amazon, 12%. These stocks just still needs to go back to zero, basically to the flat line just to break even. So they can just move down here. All their earnings are out of the way now. So the clear winner from all these earnings were only Microsoft, Meta, and Netflix. That's it. That would meaning that those the stocks that were sort of negative and they just kind of like turned around. Eli Lilly right there, 4.85. I mean, I understand like everybody's so focused on price all the time, this, and I want to go up, I want to go up, this and that. But if you start looking at the performance to see actually where the stock is doing and how much time do you have, you know, these are the stocks has to move to turn the market around. These 50 names. Then you can go back to the 100 ones, then it will add 50 more that will have a lower market cap. But these are the top 50, which is they're all in a Russell top 50 index, they call it. The S&P has the 100 and a 500, and then it goes 1500 and so on. But what is it? I mean, looking at the S&P down 3.5% down for the year to date, and this is just it's all flat. I don't there's not that many names. I mean, you think Philip Morris, which is up 41%, which is pretty impressive. You think it's going to turn the market around? Absolutely not. We need Mag 7 to turn things around. That leads the market. That moves the market. These companies cannot like Visa not gonna help. I mean, Visa's fine, 11%. Yeah, of course. You have McDonald's here at 8.21%. You have a MasterCard, they're always gonna be the same. You have a Visa here and you have a MasterCard, they're always gonna be side by side. Here you have a Johnson Johnson, JP Morgan, Microsoft, AbbVie, Meta. So it just I mean, yeah, I mean, doesn't mean, it can have plenty of upside, but I don't know. I don't want to I hate to be sound negative because I can't stand that, but I'm just looking at so much data and looking at stocks performance and things like this is just I don't know, this year just looks kind of flat to me, to be honest. I'd love to um rally back. I'm gonna stay bullish. We'll just if we're gonna have more dips, I'm definitely gonna buy it and try to see if we can play some counter trend moves to the downside. But leaving something on while we have swings that are up, as that's I mean it's a tough bet to make, but things can turn around pretty fast. We all know that. So yes, the reward is definitely there. So if you just position something against the trend, against the swing, and you just hold your breath and hope that we get lucky with the big open to the downside, because there's nothing like literally like sort of trailing to the downside anyway. So the thing is, this is I'm been looking and there's so many stocks that are just so close to this benchmark, which I don't like. I always like to look for a stock that is kind of further away from the benchmark so you can find some alpha. These trades right there, they're just like these ones right there. You see like how like literally right there to the center point. It just I mean it doesn't mean that the Visa is not picking up momentum. It is, but it just your upside is going to be a tough one to fight. It just doesn't give you much alpha. So I mean, Qualcomm is here. This Merck that like they're all turning around. I'm watching. It's something to see if he's trying to curve something up here. I'm keeping an eye on Exxon Mobil. Might take a shot at this one. Um, see if we can. Chevron is here. Exxon Mobil is here. So these two are the top leaders right there. So I like to trade this one. Much decent, much better premiums on this stock. So we'll see. But the energy is rotation looks horrible. Um, Plus this Trump is um, not gonna let energy get out of the way, go too much up either. So yeah, he's very close with the Saudis. Um, Financials, Accenture here, Amazon, Cisco, AbbVie kind of like taking a little dip here. It's good names. I like this company. I'm actually watching this. I did a wave count yesterday. This right there. So I'm just trying to see if it's a 1 hour chart. It's a very clean wave count. You can do as a one, one, two, one, two, three, four. Look at that. Three versus one. God, it's just almost to the penny of that 200% fib. And now you got to back it backed off right from here. And now, if this is a one, two, three, four, now this four must stay above 180.60. It just then it came back down. Look, it hit four versus two, 100% almost to the penny as well. It works really good with fibs though. Um, if it turns around from here, you know, then this is the fifth wave, 195, 198, basically going right back to the 200 range, but it has to stay above this 180.60. I was watching yesterday, and I was like, and then I'm looking at the swing is down. I was like, oh man, it's gonna be a tough one. And I thought about like, should I just put something small just to leave it there? You never know, things can turn around, right? But then I was like, I'll take a look next week. So I'm just gonna watch. It's a pretty nice. I mean, if we talk about from a risk point of view, like you're taking a 4%, I'm sorry, 4 point risk to the downside because your clear invalidation is here. Your wave four cannot retrace below wave one high. That's just a big no. It's from here, if it curves out back up to the 195, would be beautiful. Be a really nice trade. But the other thing you can the the other way you can do, you can just actually make a 1-2 count as well. That will work as well. You can just take one here and make this a two, and then you have a three, four, and five. That is, but the only problem with this, that this size of two compared to that two, four is going to be a little challenging, because your channels and stuff just not going to look right. So, 100% relationship of two versus one is perfect. Was almost to the penny. It's perfect. But now it just has to find its way up. Now, if we kind of, but I don't know if this low is going to hold. You can do it like this. So, but this side just has to hold, so it's a pretty, I don't know. I mean, we're gonna want to watch. So
How does Lily look?
I had, I'm gonna watch this 720 on Lily. It's pretty sideways, to be honest. Look at the all-time high of 972. It has took a first dip near up to the 78.6, slightly went up, came right back down to the one. It's just like a simple two measured moves. So if you had a two measured moves, I mean, you can count this as a five, as a one, two, three, four, five. You have five here. If you make the case here for a second one, which is a pretty steep decline here, I mean, the Lily low was 670, 677, and you know that the price is coming right close to the 720 now. So here's your decision zone against this low. And I don't think that Lily is going to crack through it pretty easily without some sort of a bounce. But if you look at a stock, this stock is down for like what? We just looked at them. the 5% year to date. Um, kind of gapped up right there on some sort of a trial or whatever. Something came up, and then from here it gapped down. It was kind of, I mean, I don't know, like looking at this, it's pretty sideways, pretty range bound. It's starting to look like a Nvidia stock. Because these stocks had a massive runs for the last 2 years and so, you know? That's what I'm saying is it's like if you really look at these stocks like big names side by side, they just they're just starting to show that they just a lot of them just run out of gas. Here's Microsoft. I mean, look at the Microsoft all-time high 468, which was on July 5th. Look what Microsoft was doing, down, up, and down. So if this is a three, so what happens after three? Five. You know, it just Microsoft looks pretty good. I mean, we're definitely gonna buy it again. Now, here you have a clear five waves up as a diagonal, three down, right to the 78.6 mark, two versus one. And then from here, we have a clear three versus one, 442 to the penny. This is what you call Elliott wave. This is the beauty of an Elliott wave right here. Five up, three down to 61.8% fib target. This is the golden ratio of Elliott wave. Now the question is the third end here? Is going to end in between or is it going to go to 200? So always going to be, now why you call this as a third wave? Third wave always is going to have acceleration gaps. Always remember that. It travels fast. You know, it's always going to have back those gaps not going to never get filled instantly, or it could take months. That's how third wave goes. So when I'm hunting for these swings, I'm always looking at 1-2 swing as well, because that just gives you the same concept of a wave count. You want to catch this third wave in a trade. You know, I call it a money wave. This is where you make the most money. If you simply play a measured move, you can, which is right here, three versus one, then 161.8, then 200%. Now, if third ends here, what are the retracement for the fourth wave? Well, we can run them. Here's 4 versus 3. And pin this one. That's our zone. Oops, there you go. That's our zone right there to the downside. You have a 4 versus 2 and 4 versus 3. So we had a pretty steep second wave here to 78.6. There's going to be a very good chance that this is going to some sort of a complex correction. But the point is that if this third ended here, what if it's going to go all the way back to 465? This stock is roughly 6.77% off from all-time high right now. So Microsoft is absolutely doing really, really good. Got a big pop on earnings, so that helped. Now if the third end here, then of course all these fibs that you just looking at here, 4 versus 2 forward, they're gonna start to move up. You see that? See I'm dragging this, how the price changing. So I don't know where this thing ends, so I'm gonna watch. But whenever this fourth will come back down and settle, I'll set up a time here, and then I'll just try to see if we can play the move back to the upside. Microsoft is, it's a good, it would be a good trade, but chasing a third wave can pull back. It just can rip right back to 465, and it's gonna hit the 465 mark, which is the 200% against your all-time high. That's gonna be a crazy zone right there for the price to kind of take a pause. And you're not gonna instantly break 200, like just rip through it like this. You're gonna back off from this. I mean, if Microsoft is really on um, on a full charge here, I can 200 it can go up as high as 261.8. This third, the third is always hard to predict, and I mean, you can, these are your targets. Well, if you're not happy taking something off from here, do you wait to target this, or a breakout above 468? So these are the tough decisions to make, to be honest, when you be in a trade. Should I take my money here because we're going to be due for a fourth wave, or is the price still has more room to run to the 200%? We simply don't know. Neither do you, neither do I. Nobody can give you that answer. It just it can just ends here in the middle and then backs off, you know? So how do you position something like this? If you say like, well, I love this company, I missed out the move on it. Now I realize like, well, I by looking at the price, I know three versus one can go here and it can break out before it settles back down for the fourth wave. So how do I position myself on a running stock? Well, you have to get in, okay? And if you happen to um, suffer get yourself in the fourth wave, you got to add more. That's the only other, that's the only way you can do it, because you're buying up here now, and you know that this stock is going to pull back at some point. Okay, and the fourth wave is just not gonna. It's a counter trend move anyways against this. So you have a clear stop loss right now at 394, which is the high of this wave one. And that's it. Yeah, so nobody wants to buy anything when it's down here, and everybody will chase here. It's always like this, you know. Tesla was down like 250, nobody wants it. Now everybody wants to pay 310. It's very tricky, but I mean, the diagonals are very painful to trade. It takes forever. Okay. Always remember that. Anything, if you had a steep decline to the downside, and then when the price has to make its way up to the upside, it takes time. You don't just come back down 53% from peak to trough, like the decline you just had was 53%. You're just going to rip right back up. I mean, you have to look at the same thing. The company fundamentals, horrible. Sales are down, you know, but everybody's buying the concept of a robo taxi and this and this. Though everything will be fully baked into the stock anyways by the time it's gonna come out this summer. It's already pre-announced. They already picked my stock, the price already know. So he's gonna launch a robo taxi and everybody thinks that the stock is gonna explode. Stock is just gonna is gonna go other way around. Most of the time it happens. Look at Apple with all these events and stuff, and with these videos. These are fully baked in events. I never position myself for these kind of events. Absolutely not. They're I mean, fundamentally, right there, the stock doesn't have a very strong case to make, you know? So if daily swing is up, weekly swing is up, monthly is still down. But it was showing yesterday that it has managed to put first monthly higher bar right there. Tesla finally put a one first higher bar for the month after one, two, three, four down for 4 months. Yesterday when it broke above 294.86. So you have to ask yourself this question now. So you had a 56% decline from peak to trough. Were you looking at this only because of robotaxi? But at the same time, nobody's buying Tesla. Sales are down from here to Europe and everywhere else. So you're just buying a concept. I mean, I don't want to sound negative or something, but I compare a lot of things. Swings are my swings, fine, they're working, then you have to look at the company um, like we, this is why I made the case of this. This makes perfect sense. If I had to, I mean, make a case to the upside, this is the way to go. Because if the thing is that these are all bunch of 3-3 moves that just since he bought Twitter, we need something like this. There's not, you cannot count eight swings from anywhere. You cannot count from here. You cannot count from here. Well, you cannot count from here. If you just take your previous the first initial drop, this is a three-way move. We need five. That doesn't work. So if we don't have five here, and then we have another three here, so what does that tell you? We need five swings. We don't have that. I made a case here of a um, if you remember of of a complex with with the WXY as a Y as a triangle. And we made a higher high. I said like this is good. I can put one here, put four here, and now we need a counter trend. But this thing came all the way back down here. Just no, it's just not gonna work. We need something off the lows, like at least eight swings against two, but we don't have it. So we're gonna see how we're gonna counter. But the bigger picture, I'll just it doesn't mean that it doesn't have upside. It does. A stock if still has 64% upside left to all-time high. That's a lot from the closing price as of yesterday. That's a lot of upside, So Look how many, well, how long it took. I don't know. I have to look at the date. Like last week was here. Yeah, it took what? Let me see. April 28 was the high, right here on the bottom. April 28 till May 9th, which was yesterday. But what you know what I mean by that, that was the high on April 28. And May 9th, so yesterday, it took out the previous high right there, 294. So it worked fine because the way I put a spread on was so like okay I caught this one, booked partial profits because when we had this move here, you see this 100% relationship, three versus one. That's what I took off. And I just left it. I was like, okay, I'll see if it's gonna go up, fine. If it's just gonna back off or whatever it's gonna do, and this is what the Tesla has been doing, just literally went sideways. So the same thing here. Here's the low that we just put at 214. How are we gonna count five to the upside now? One, two, where's four? We're missing four. Just mark any low. This was beautiful right there. That's a clear five-way move right there. I was really hoping that we would stop somewhere here. That would be a perfect one to, and but no, we just end up going all the way back here, made a new low. So now we made a new low. I cannot start the wave count from here now because you had a low here. You have a new lower low here. That just literally violate, you're gonna put a two here? Absolutely not. Cannot do that. The low is this. Now, if you take this, if you mark this low, now you have a three. So, we need something like this. So we have a three, has another three, has another three, has another three, and it's going to be another three. That will complete a five waves in a, call it a B, sorry, A or one. So, okay, what are we looking at Tesla? Now we're looking at Tesla is 5 versus 3 relationship. Okay. So we have a 3 up, 3 down, 3 up, 3 down. Now we're going to be looking for something like this to complete 1 or A. Once the diagonal completes, then it has to come back down to a second wave. Second wave diagonal minimum downside retracement, obviously a prior fourth wave. It's going to be a minimum downside target whenever the thing is going to come back down. So it's going to be a same thing. Like, well, I don't know how long it's going to take because, as I say, diagonals are pretty painful. It takes forever. And then from here, you need another three, something like this. This gotta has to take several days, a week. Then you need to get this, then get, but it all depends. If market is gonna get heavy or it's gonna sold off, you think Tesla is gonna rally? Of course, Tesla is gonna back off as well, right? Tesla cannot just run on its own. So we just gotta have to watch the overall market as well. Yeah, Tesla has its own personality by like yesterday, market is flat and Tesla just rip into the upside right from the start. There wasn't any news or something came out. It was just due for a due for a pop, I guess, just because it's just so coiled here for so many days, over a week or so. So I mean, if this happens here, I mean, it's gonna be a very nice buying opportunity coming if that's gonna be the case. Right now, it's a complete mess, to be honest. I'm only trading swings. So I'm trying to make a case here. This is a 1 hour chart that I mostly I track all trades on is based on 1 hour. So it's a swing one that we just had yesterday. And I'm gonna watch and see if it's gonna get settled down, hit in two. And then I'm gonna buy again for the third swing up. So that's the plan. So I can sit and make my fight this one. Um, is this diagonal or this? I mean, I can do all this, which is fine. But I really don't want to waste my time. I can just leave a bigger picture the way it is. I'll just simply trade this. I know exactly where the support is. I know where my weave up is. That's all I need. This is all I need. I don't need to sit and make things too damn complicated about diagonals and A, B, C and the counter trend and this. I just follow the swings. It's the same price. We think the price here is different than what it will show you on the wave count. You're trading the same price. Why do you need two things side by side? I mean, I do it for myself because I need to I need to put these two together. Just a go signal right there on a 1 hour. I mean, it's this sucker. This is an indicator signal. Um, it fails. I mean, some of them are just plays are really good. You know, I these are custom bars, meaning that if the swing is up, even the fact any down bar doesn't mean is as long as the swing is up, the bar is gonna stay green. When the swing's gonna turn down, it will stay red. So and then anywhere this go signal triggers is going to show this aqua bar. That's where the signal triggers. So I scripted those with the script, so it changes colors based on whatever conditions is gonna met that it's easier for me to read a chart this way, but just like I'm just gonna trade this. I'm not mm, somebody was asking me the other day, like, show me the 195 minute. That's like, I mean, I'd love to, but it's a mess. You know, there are some times that you don't really get a clear read on a wave count. It's tough. I get that. you know? So what do? You just take a simple chart and just try to trade from there. If you don't have a clear read in a chart, which is the best thing, is just look for something else. Why it has to be this all the time? If you don't have a good read on on a one chart, just leave it, you know? This is the screen that I watch every day. This is up on my this thing is up on my top monitor all the time, you know? I have this macro watch list up here. So these are all hourly swings, okay? So this is a 50 stocks of um the 50 that we just looking at earlier. So these are all 50 stocks that I watch. Most of the trades that I do is from here anyways. The reason why it being is because these are the market movers, big names, good companies, and much good volume, better fills, better bid and ask, and I like to trade good quality names. Now, if you talk, want to trade Mara and you want to trade something, you know, a firm or, I mean, I don't really look into those stocks much. I, my focus always on stocks that move the market, like the sector, and I like to trade the leaders because what I've noticed and like over all the years that these 50 stocks, whichever it's gonna, yeah, they're not gonna be, all different businesses. They recover much faster compared to the rest of the stocks. Some of the stocks can take months and months and years to even recover. These stocks, they turn around fast for with any dip. So it doesn't mean I have to jump on all of them. I mean, the trigger, I mean, it just I take very selective um trades. So this is an hourly, this is a daily, this is a weekly. Then I have this as a monthly, which I really don't care much. I'm going to remove this one. It's too big of a time frame. This kind of gives me a view of like, do we have a higher bar for the month or no? Um, but for the swing trading, I just use a 1 hour chart. That's it. So S&P 500, 1 hour chart, fifth swing, swing is down right now, you know? So it's very choppy. Why is that? Like, you see, this is why I don't, this is 1 hour. I mean, I can do a 15 minutes, and I get even worse. You see right there, it's very narrow range. You don't I don't like to trade these kind of a sessions, so because you have to look at this way that this was one, two, three, four, five, six. That's it. That's one session. You have 6.5 hour session, right? So you have 6 bars for the whole day. So this is what we had yesterday. This was the yesterday session. As a matter of fact, I can put a time box here. You will see exactly here. This was yesterday's session. From this was the high, that's the low. That's the GAN time box. It gives you the exactly what the session was. Now, if you want to go to a week, change that thing to a week. There you go. That's the whole week of trading. That's the high, that's the low, and that's the all 5 days we just traded this way. So these numbers, the fundamental guy has asked me like what these numbers are. These are the volatility swing counts. Okay. Why this thing changes? Um, this is the counts the count swing. So this is five. You see, it matches five. Same thing with SPY. Now the thing is like you see, sometimes it's a little goofy. The SPY it trades after hours. It's very tricky. Some of these swings get on these ETF like this 24 hours. I don't really, I'm not a very big fan of this trading to be honest. Why is because when futures are trading, SPY is trading as well, right? Not the S&P cash. S&P cash index opens at the bell and it closes after it closes at the bell, but it has 15 minutes of grace period up until another 15 minutes after the close. Same thing with the SPY and Qs as well, and the IWM. So all these ETFs, when the bell rings, your entire trading stops. But the indexes like Russell, SPX cash, NDX cash, SPY, Qs, IWM, and diamonds. So these are all that you can trade. You can actually place a trade and you can close a trade after the bell as well, but you have 15 minutes to do that. And once that 3:15 mark is going to hit, then everything will stop. So you do have a grace 15 minutes time period. Now there are some brokers don't allow you to even do that. I believe it's Fidelity or something. They just close everything at 3. But Schwab doesn't do that. The Schwab has always been this way. And a lot of time because they know like, there's some earnings coming up and and they don't announce their earnings until 15 minutes when the market fully closed. So people will be start betting on them, like somebody would report earnings 5 minutes after the bell and earnings came up strong. You can easily buy a SPY thing. You're like, okay, fine. If a Microsoft pop 10% in the next 5 minutes after the bell, what do you think that was going to happen to the market? Of course, the market is going to open higher. So they don't do that. So a lot of time they're just going to buy time until the market fully closes at 3:15. Then they will announce earnings. But you have futures are working, so same thing. So this is what I watch every single day, So if the 1 hour swing is up, fine, down, so it's gonna, so these numbers are just telling me like where the swing count is. Look at Netflix, where the 14th right now. It's big is gonna roll over any minute, any day now. It's a 14 swing right now on a 1 hour on Netflix. It just keep on going. It's crazy this stock is. So we're gonna watch. Let's see, it's probably gonna take a little bit of a dip. Very, very high count. Higher and higher the count's gonna get, they have a very good chance that you know, it's gonna take out one of the previous swing low, which is right here, which is 1122. So if the price comes back down and take out one of the previous swing low, that's when the count will reset. So anything that is, then you will have negative print, meaning now you're coming down. Okay, because if you have yeah, you guys read do I still have that? It was I did those I don't know if you probably some of you probably say Let's see, did you save it? And well, on the education tab, remember I wrote the whole thing about how the volatility counts work, the odd numbers and the even, the even numbers. Man, this thing they just slack. They just delete that thing for after 90 days. I have that. I don't know. Some of you probably save. You gotta save the um. You gotta save that thing here. I think here. Um. Here's the swing trading. That's the how the count works. So I can just post it. Let me see. I can just do this. Copy this. Hang on. And then we can do. Okay, I just posted here on the volatility swing. See, odd numbers swings are in the direction of the main trend. Okay, it's all about the odd and the even numbers. You just have to remember that. The successive odd number swing must extend past the previous odd number swing, and then the swing three must higher the swing one. Same with the wave count, remember? One, two, and then we're looking for a third wave. It's the same concept here on the volatility swing counts, works pretty much exactly the same way like the Elliott wave does. But the Elliott wave ends in 5. This one can go up to a 14, 15, whatever. We're just looking at the Netflix is at 14. So there's no limit on those on the number. As long as the price is making higher highs and higher lows, the count just continues. Just remember that. Elliott will put 5 and is going to give you the same higher lows, the higher high swing after that. This one has the same thing, but the count limit just goes on and on. So on an odd swing fails, so if you what I so it so your swing starts here like this. You have one, you have two. Okay. So now the swing three must end higher than swing one. That's the high of the swing one, right? So now you're looking for this third swing. See, I mean, is it the same like we look in the Elliott wave, right? It's the same thing. What you're looking for is this third wave. So when I'm so when you when so when you're doing Elliott wave, you're always looking at the 1-2 count, thinking like I want to cash that third wave. That's what I'm always after. But not every stock is going to be in a third wave, like heading toward the third wave. That's you're gonna have to find those trades, and those trades takes time because you had the initial move, and now the stock is pulling back, and that's well, how you gonna find them? I have a scanner. That's how I scan all 500 stocks in one shot. It will narrow based on all the 1-2 swings. You know, we have to filter it. Otherwise, we can't just sit and do manual go chart by chart and chart like okay, well, doesn't okay fine. You know how much time it takes, hours and hours to find something that looks right to see like okay yes now I'm gonna put my money here. So swing three must end higher than one. If an odd swing fails, extend past the last odd swing is called a fail swing. It's gonna have what? A fail swing is gonna have a F status. Okay? F stands for failed. meaning that the third is called F3. If it reaches here, meaning that the price went up, didn't make a new high, and then it reverses back down as some sort of a news or whatever and took out this low of your second swing. It's called a fail swing. Now you have -1. That's all positive one. Positive 1, 2, 3. Because now you're going like this. So whenever the swing fails, meaning that it takes out the previous swing low, that becomes a fail swing. That's where it is. If an even swing extends part the last even swing, then it starts off a new number sequence in the opposite direction. When a swing reaches the required ATR, which is the average true range, every stock has that, which is, we look for a 1 standard deviation and a 2 standard deviation move to change direction. It may not, but nothing is guaranteed, but may not yet have passed the previous R swing. Is called a potential swing. If the price reaches the exact ATR, which is the exact, average true range measured move, is going to have a P status. It tells you that that was the right potential swing, meaning that whatever the price was based on a 2 standard deviation reaches that number, okay, off the lows, that is your potential swing. That is the trade that, that the target that you're trying to achieve on your trade. A fail swing essentially have a lower top. See, that's what you call a lower top. That's your top right there of 1, 2. Has a very high probability. This is the word indicating of a start of a down move or an up move. Because you could have another way in the same way going up as well. All you have to do is just flip that thing upside down. Remember last year I caught that Bitcoin trade. That's what it was. They're very hard to find because well I have a scanner, but I'm just what I look for. Fail swing. If I happen to find one, I'm just those are very good probability trades in either direction. The one with the um, and then it's rare to get swing. It's rare to get sets of swing that go beyond 5. If the count gets higher, probability of a change in a trend gets higher. That's it. So these are volatility swing trading. So it's just a number sequence. So that's different than a 3 bar. 3 bars are like you counting bars based on higher lows and this. Then you have the percentage swings, and then you have dollar signs, and those are this. So I do all of them. So I just I just keep them simple. I don't want to throw a bunch. I don't even have any moving averages and stuff here. Just a VWAP. That's it. That's all I've been. I mean, I have the other screen, the Schwab on my other monitor that it has those. Remember the what I post every single day? It has the 9 and 20 EMA. So I do it over there, but I don't want to clutter the whole whole chart with a bunch of stuff um, going there. Q's 1 hour, it's the 6th swing right now. So where does now the question is that where is the swing fails? Okay. See the count is going up and up, right? So where do we count from? Okay, so it starts from here. You see this fail swing right there, F. So what is the point for this? Why is it failed? Because price dipped right below this low, which is 437. I have two swings here. Looks low. So this low, which was right here.
Tomo, so
Yeah.
this example is the number, bullet number fourth of the, the swing, explanation that we were doing. F5, and then it failed. Oh, it went down, it extended past the swing four. So the swing is reset to number one
Yeah.
on the left. Yeah, on the left.
Yeah.
That
See,
one.
it made a new. Why this thing is failed? So okay. So basically, what it is. So you had one. This is where the swing starts. Okay. Let's go back here. If you go back, I believe you remember. Let me show you here. Why I went bullish on a market. This is the low. S&P put at 48.32. Okay. And that was a third swing. I knew it. We got a pop here in four. And this was that the the 2000, no, it was this one right here. Then the market came back down here. You see it right here is a fail swing. It doesn't tell you that it's gonna fail until the price breaks and takes out the previous swing high. You don't know that. It will not gonna have F status, okay, until you take out the previous swing high. That got taken out here on that 2000 point pop that we just had on the day this is where the swing count changed right there. I was like, as soon as the price, it was still sitting at five. It will not tell you or give you a confirmation because you don't know that the price is going to take out the previous swing high, but it did. This is where the status will change to F. Now it starts what? One. Then here comes two. Then we got a dip here and another pop. Then we got another, couple down sessions here. I was like, it's gonna go. Now we're gonna wait. It's a new sequence starting to the upside now. I was like, there's absolutely no chance in hell I'm buying puts now. I'm gonna buy. And it's time to go bullish. This is where you see that this low right there. And then I took this wave count and I made this thing as a truncation of this pop. Here goes one and here's two. Here's one and here's two. Now I was like, okay, fine. Now I got Gann. Now I have Elliott. Let's let it work side by side and let's go. This is why I've been long the market from the last 2 weeks or so. I was like, okay, this is gonna stay long. It's the same exact thing that I did on Bitcoin, if you remember. Where's my crushed the Bitcoin last year? Where's my the one thing is out. Let me make a new one. Here, not this one. Right here. No. This one, this failed move right here, September 2024. If the value is in thousand, I gotta change. I don't know this, some of this stuff that I don't have crypto data. That's why it's just I gotta manually. It's the same price. It shows you just 2 decimal points compared to the same price, 103. You see right there. I've been watching. I was like, and I'm always hunting for these field swings. I know the system that I have. I know what works and what's not work. Okay. I mean, if I lose two, three trades, I know how to win 10 in a row. Okay. So don't judge me what I do. I can run a winning streak for a very long time. I'm always like this. It's just right there. This is when I start buying on Coinbase. I've been say like go long bullet. And then we had the rotation that time on RRG that is coming off from a lagging quadrant toward the improving quadrant. I caught this entire move up. I'm still long Bitcoin. This is where Bitcoin is when it moved. Okay, now where we at? One here, two here. Look how small the third swing was. And then took a dip, took out this low. It doesn't show negative, but it's considered as a negative. Okay. And then we put up two here. Of course, we're going to have resistance here to the previous swing low. Made another lower low. And then from here, took out this 88,710. Now, back in one. And then we don't know how far the one will go, but then it's going to come back in two, and then it's going to go up in three, four, five, and then, go on and on. So it's really a simple way of counting. If you look at them, it's the same concept of an Elliott wave, right? One, two, three, four, five, but this one goes on at six, seven, eight, nine, 10, God knows where. Some of these gets really, really high, the counts, and then they will eventually um, um, reset. So here's Palantir. Look what it did. Went up to 21, failed, and then managed to rip right back up. As long as you take out the previous swing high, swing count will change. That's what the whole thing we just read right here. It's a number sequence. That's what you're looking for. You know what your high is, you know what your low is, right? So if I'm bullish, okay, you see how it changes colors right there? Because what it is right there. It As long as the line is black, it's unconfirmed until the swing will confirm. So you can change that. You can do simply up and down if you like. I don't like to do. I can see it. I know if it's down, it's down. I always look for confirmation. I need that confirmation to see where the swing has turned direction. You can just do simply up and down move. You can just do a trend move, which is the same way as an unconfirmed. But I like these unconfirmed. It actually tells me exactly at which bar the swing has turned up, which was in this one right here. So back to that's what I hunt for trades. That's all. And hourly takes time. And now if I go back to a 15 minutes, look, imagine trading this. You always have to look at this way. Okay, I've done a lot of um like different time frames and see what works and this and this. Smaller the time frame is, you're gonna have a much faster like you're gonna have much the the swing will turn direction much faster than a little bit bigger time frame. I mean, this is not easy to trade. You know, you entered here, whatever. I mean, it's the same concept. So you have initial swing that's down here. Now you're looking to take out this high and look, and then you get stopped out on a same 1 hour bar, basically, because here the next bar is lower. So it's very tough to count. I mean, you can go as 5 minutes if you want, but you can't. I mean, you get a lot of false signals because the swing changing too fast on a much faster rapid move. So I mean, 30 minutes is okay. Half hour, 30-minute chart is good. But I always like 1 hour. Same thing when it comes to 1 hour on wave count, as you all know that. It just gives you a much better read. You need to, if you enter a trade, you need to let the trade breathe. You don't just like, I want to enter here, I want to cash it out here. I mean, why you are even in a trade where you just playing a 1 hour candle or a bar? Like, if you're doing this, you just go back on a 1 minute time frame. Play on 1 minute. There's a lot of people do that as well. But you see like how fast this is 1 hour, this is 1 minute. So that is 1, 2, 3, 4, 5, 6, 7 minutes. So you have one low, so in 2 minutes you have second, and then you're just looking for this for one to the downside. Just well, each minute. So I don't waste my time there. 1 hour just gives you a much better read, and wave count looks, something like this one is up. So I start posting this thing now on to everyone. See, like Microsoft right now is an 8 swing. See, the count is getting higher and higher. So what it's looking for now is a ninth swing to the upside. This one right there is the ATR target, that which is, we just looked at them, the ATR, average to range. So doesn't mean that it's gonna hit them always to the penny, because if the stock kind of goes sideways, that's when the ATR drops, right? So I mean, I always like, if I enter a trade here, my eyes are always at the high of the previous swing. That is my, if I'm bullish on a stock, I'll just, this is the high that I'm looking for first, to see if the price can take out this high and to see if the price can move higher. That will take a couple hours as well. It on a very strong 1 hour candle, yeah, it can just rip right through it. But instead of like me like sitting and staring at the chart, I just simply go here, right click, price alert, drag this thing and just put it up like this. Leave it. Now I'm just doing and looking other stuff. Let the thing work. I'm not sitting on my Microsoft trade and staring at the chart. I just set a price alert. So this,
Well, can I ask a question?
yeah,
What is that, green and red, the step up line? Yeah, that line. Yeah.
yeah,
Yeah.
that's
What
the,
is that line?
yeah, this an ATR line.
Oh,
It's an ATR.
ATL line.
Yeah. It's a 2.5 standard deviation line on a 1 hour. So it's a pretty good way to to look for a potential support, because it basically measured a 2.5 standard deviation move based on a 1 hour time window. So it's a lot of time it held really well. Like you see right here, she's been for like 4 hours, meaning that this is 1 hour bar, not really this one, and this one. So for like 3 hours, it's been the 436, it's been holding pretty good. And then from there, it moved up to 439, it kind of sitting right there. This yellow line right there is a signal that I built. Okay. So when the swing turns up, this is gonna give you the exact entry, what entry you can take, which call you can buy. I like to trade some, add the money close as possible to the money because I want to have at least 50, 60 deltas on my trade. If you're gonna go further out, then you have a cheaper delta because you're paying cheaper premium. Now you gotta size up the trade to uh, to boost the delta on a trade. So, I mean, if the swing is up, it doesn't matter if his swing up is down or up. That yellow line is the signal that that um it tells you the price where to get long. I had to pay money to Optima to write me that script because it's a very complicated script. They charged me for it, which is fine. I said, I'll pay you. Um, and I couldn't, I was kind of new to it at that time, and I just wasn't really know too much about scripting and stuff. And I called them. I was like, hey, I have this is what I want. Can you write me a script for it? Just like, yeah. Then this is like, we charge this much for consultation. I was like, don't worry about that. And then they wrote me the whole script, and ever since I saved it, and I have it. And it changes. It tells you like if I want to go on a spy. Okay, swing is up, calls 565. 565 is it doesn't it's because it's like calculating the ratios. I just go off with the print. So 565 on a 1 hour is the buy signal based on its direction if the swing is up. Now, if the swing turns down, exit trade because this is gonna fire another signal to the downside again. Now you have to wait 3 more hours now for the swing to turn back up. That usually doesn't happen. It can in a single session, but it depends how the market is trading. So up and down, it doesn't matter, but this yellow line keeps appearing based on swing up and down. This is meta. The meta swing is down in two. So when the swing turned down here, last time it did, it fired up this put signal to the downside. So you basically what you're doing is you just basically take the signal, you just trade in the direction of the swing. If the swing goes up, if the swing is up, as soon as it's gonna change color, I will do it that way. Let me showing you some secrets of my trading. So here, so as the red box means the swing is down. It's been down since this bar, which is 5, 9, 10 a.m. 10 a.m. is when Meta 1 hour's swing turned down. So when the signal turned down, sorry, the swing turned down, it becomes red. So you see right there. So this is all blank. So it's going to be another bar is going to then the shaded area is going to move based on each bar, because this is how I did this. So as soon as the swing turns up, it will turn green. So once it turns green, now you say like, okay, now the swing just turned up. The new signal is gonna fire. It gives you exactly which call that you can buy, which is most of them is always going to be at the money, 50 if you just buying 50 delta. So what are you looking for now? You just looking to target the previous swing high. That is your trade setup. Now you say like, okay, swing is up, signal is in, now I'm long. So where do I set my target? You simply go back up here to your previous swing high. That is your minimum upside target as long as the swing stays up. That's it. You can close the trade in between anywhere for 3 points. If you want to scalp something for the day, you can do that as well. If you say like, well, I don't want to wait all the way up till here. I mean, if the stock moves, if Meta can move 4 points to the upside or 5 points to the upside, you can close the trade that as well. It doesn't matter. Money is money. You can either you just wait it out for the swing to turn back up, or you just try to target the previous swing high. So Meta right now is a 1-2, right? Typical is 1, that's 2. Now this 2 right there must stay above 584. Now at the same time, we see is what? Swing is down. Here's your sell signal. Should we just enter the trade and just wait? To just buy something here on a downswing, or wait for the swing to give you the exact confirmation that the swing has turned up with the new entry? Because right now, this is the put entry, which is already, playing out so far. So whenever it's going to take 1 hour, 2 hour, and a 3 hour, when the 3 hour, the hourly bar will appear, when this thing will turn green, okay, now you know for sure that the swing direction has turned up. And then it's going to fire a new signal for you that whatever is going to appear, I don't know that. This line will move. They'll give you exact entry, and then you can go long. That's it. So that's what I watch. I mean, I can take any trade I like by doing this all the, but I don't do it much. It's a risk that it doesn't mean I have to play all the time, you know? Is Amazon. They're a little, I mean, because they're pretty choppy sessions. So Amazon is where in a third swing up on a volatility. Okay, this VSR. VSR is a volatility swing ranking. That's what it stands for. Um, and then a 3 bar swing is up, which is all green here. That's your buy signal at 192 calls. That's it. So they're all gonna um give you that's I mean this is what I get entries all day long. All these stocks are just changing up and down. Swing counts are, I'm just like trying to find and see which one I can place a trade on, and I'm watching rotation here. This part that updates on real time. So kind of see like, okay, if I will enter a swing trade for the next couple weeks or so, I want to see how the stock is doing based on momentum. If there's enough alpha there, the stock can move based on 1, 2 standard deviation move. So you got to prep a trade right based on looking at several things. This is a 1 hour fine. Now you have daily time frame, swing is up. Weekly time frame, swing is up. So that tells you that you have multiple time frames that the swings are all up now. So yeah, it's worth buying a dip because it's gonna if the next trade that I will do another one, it's gonna have plenty of time because um, look where it failed yesterday. Remember I said yesterday in the VWAP, this is exactly what I cashed out that trade yesterday. This VWAPs are I mean they're really good. I don't know if some of you guys follow it or don't follow. You should look into these VWAP, some of them on your stocks, whichever you follow. I think they do a very hell of a job, you know. That doesn't mean that the price cannot break above VWAP, come on. But it just um there's many different type there are so many of them. I was like you have an anchored VWAP. Then you have a moving volume weighted average price VWAP. You just only have a volume weight. I mean, there's so many of them. Like I show you on this one. I gotta this trade fail. This is a lot of not gonna. It's a small one. It's okay. I can just no big deal. Remember the wedge? Look what happened to earnings. It recovered, but it's gonna have resistance here. It's just this is wrong. Swing is down now. I think I'm just gonna close it out on Monday. Glad I trimmed the whole thing down. It was a very good setup here, I thought, but it's gonna break that wedge. Has a pretty clear 1, 2, 3, 4, 5, and then one. It's like the whatever W can call it a WXY. It was a very nice wedge, and I was like, okay, I'll bet to the upside, but trade didn't move. Waited for earnings. And then I just said, like, okay, I'm just gonna turn that thing into a lotto. That's because I'm not risking $1,000 into an earning. There's absolutely not a chance. Um, left it left it one, and it's a, it still has premium left. You never know. I mean, it's it's gonna have this resistance here now at 56 because this is where you see the color got changed. So came up to 55.40. It really didn't test it yet, but it's a very low ATR play as well, but it took a pretty big dip from 58 to 51. Um, yeah, there's a lot of these
So hang on, Ma. So which VWAP do you use?
I use the
You
anchored
said
one.
that the
I'm gonna show
anchor
you
VWAP.
all.
Yeah,
This
can
is
we set it up on TOS?
uh,
Can we set it up on TOS?
I have to look and see because Schwab has the same thing that it actually gives you the actual print. You see, this is the anchored one, but you guys don't have Optima, so which is this is a more this is a moving volume weighted one. You see, this is one right here. This little turn that thing into a pink. So this one is a volume weighted one. I do an anchored one. Anchored one is I just take the previous swing high and the low, and then I just use the anchor. That's the anchored one. And then you have this volume weighted one right there. Just turn that thing into. You see, there's a bunch of different ones, but you just gotta have to kind of see which one works, and I'm not, I mean, you can do the volume one, but if you had a volume on the bottom, you really don't um um care much about volume weighted one. I like the anchored. Anchored one is just because I know what my the where my where my swing count is, and just, I mean, this is the daily chart, but if you take and weave now you're gonna start throwing your weave up. That came up from all the way from the high. Now it depends where this is from this swing low, so you can anchor because you just anchoring that thing from different swing lows and highs. So you can have a bunch of those, but you don't want to clutter the chart either. I mean, that doesn't mean that this is the end of the road. The price can just simply rip through it. It's just a lot of time, like it does, like manage to, act as a pretty strong resistance, because just like you look at right there on NVIDIA. Okay, now if we anchored one up from the highs right there, now we throw a 200 here. Look at this. Come on, you're not gonna rip through like this. You know, you have an anchored weave up from the highs at 118, the pink print here, and then you have a 200 EMA, which is at 117. Look where the price made a high at 118.68 and it's gonna back up. It will, it's gonna break eventually. Yeah, so like these kind of wall that I always say, here comes the wall. You always gotta pay attention to it. Just like there are certain levels once the price reach and hit the wall, you know, you just gotta okay, well now you gotta wait and see how the price is gonna respond from there. It's the same thing that I would make with the fibs. Then I will just highlight the whole part right there. I will just wash that area now because this is gonna be a sticky zone. I did that thing on on Bitcoin. You see, it just ended the week, the day yesterday, same spot. Because I know there are certain fibs that, especially the 200 and 261.8, they're just like, and then you have the 100%. And when you have that cluster of fib that's starting to stack at the certain zone, yeah, that you're not gonna you can go and hit that mark, but you're not gonna just rip through it. As soon as where the price is gonna take a pause. So anything can happen. I mean, Monday stock price can rip right back up, but we'll see. But we have the same resistance here. Now the same thing if we go back here on Tesla. You see, Tesla, you see, it doesn't have to change it manually. Look, edge 200. And look, that's the higher that that's exactly what it says. At 307. So I was like, I'm getting out. I cashed it out yesterday. So the best way for you to follow and track a level on a swing, when you ask me for a chart, this is Tesla, right? Now you don't know where the swing starts and what the high is. See, like the actual high is here, but the count is showing the high is here. So I don't go off with this high, I go off from this high. So when you see a chart like this, you see like on a Thinkorswim, there's a price, what they call price marker. It's on your tools. And grab that and just draw a line like this. That's it. You see right there, price marker. It's the same thing on toss. It's like this. Highlight that thing on your chart. That's all you have to do just is to put lines on your chart on exactly the same price what you see it on the chart. You will have exactly what is here. You only need to use a one tool, okay, a price marker on Thinkorswim or on your trading view. All you have to do is this. When you see like, okay, Mo, can you send me this? Fine, there you have it. What you gotta do, grab a price marker, just mark this. That's it. That's all you have to do. Mark this. And then from here, if you're looking for an upside, I can project it for you. It's not a problem. But you just mark those highs and lows. That's exactly what it is. Where the swing started, what was the high, what's the swing high was, what the swing low was, and what you then we can project the upside for a higher swing. That's it. So now if the price from here, okay, so where we have, that's the high for this, right? So now what we're gonna do is we take this area from here to here. That makes one zone because this is the previous swing high. That's when the price backs off here, right? And we don't know what the low was, right? So how do we find that low? Just use the same fibs. You take this high to a previous swing low. That's your support. Now, if you want to go back to this low, fine, you can do that as well. That's your low. This is your retracement levels now. Okay, so where do I build my downside zone now? Right here. Why should I watch this area if the price will will back off or whatever the case is? Because this is my previous swing low was 271. Oh, I'm actually doing from here, so it's not gonna work. Um, I shouldn't build this one for now. I'm using this swing high to this swing low. Price came back, didn't even come and retest the 38.2. That's the 38.2 retracement of this high to this low. Managed to stay at 271. I can just simply take VWAP, throw it right there, 272. Price came at 271. And then from there it popped. You see, like you're not gonna a lot of time you're not gonna just get this penny prints. Price can stop anywhere. And then just you looking for the price to take out this high right there. Now you see the sequence is going right there. High, higher low, higher high, higher low, higher high. Now whatever the case is gonna be now, Tesla need to stay above 271. This. So we don't need this. It's gone because price already made a new high. So what are we looking now? Okay, now we cashed out a trade. Okay, how are we gonna enter the trade back again? We just simply take this swing high from the VWAP to this low. I don't care about anything else now. Where is my retracement? This is the daily bar. So where are my retracement levels? Are here, 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 and here against this low. So I'm trying to buy something here now. Okay, well, I can anchor another VWAP from this low to 87. So from 287 is what? Now you have the 200 EMA sitting right there at 286.76 as well. So now this Tesla has the pocket zone. This is the zone right there. That has a pretty good chance the stock can just literally consolidate now for some time. It's above the 200 between the weave up off the highs. If Tesla managed to rip higher, then we can project more upside. But there's no point for me as long as the stock is breaking, backing off. There's no point for me to project any upside until I see the new print. Why would I project something to the upside? It takes me less than 2 seconds to do it anyway. So, like the price hit a VWAP, backed off, session closed yesterday. We'll see how the stock opens on Monday. But this is where we at. That doesn't mean I'm going to jump on the stock on Monday. I'm going to just sit and watch. I mean, I don't know where the stock is going to open. The stock opens at 320 on Monday. It's going to change the whole look. It means that this thing is still going. I mean, as long as the high holds against this swing, you just look for entry here. And now you say like, okay, now I'm looking for another pushback to the upside against this low. Why would I now I can do this thing so fast and quick while in a trading session. Why would I sit and make wave counts? It just I want to find trades. I do watch a lot of stuff. It's just I don't have time to make wave count. I'll do it after the bell, but no, with like it just you know, here's ZS and ZS put an outside bar yesterday. Ay, ay, ay. That's the daily. Monthly's upswing is still down. If you look at the size of this reversal bar last month, massive reversal bar. This stock has upside, a good setup in a weekly time frame. I mean, I know the earnings are coming up, so that's the only look what the stock is doing all week. Outside bar, Monday, inside, Tuesday, Wednesday, inside, Thursday, inside, yesterday, outside. The car stock is crazy. This is great. I was like, there's nothing you can do. Back and forth, all inside 3 days in a row with two outside bars. That's how it ended the week. I don't know. The stock is just running out of gas or whatever. It's moving, but in a very kind of little narrow range.
So the CrowdStrike, retraced, and the net, which just had the earning, popped after earning. So the cyber security space,
Yeah.
what's going on? Are they topping out or are they just waiting for the earnings?
Okay, it reaches a fifth. What is this? Net. It reaches this fifth. It's in a fifth swing right now. Okay. I don't. When I'm here, I care less what happens here. Okay. Who cares? Focus on this. You have one high to low swing. That's it. Really nice. Okay. What do we make out of this chart? How do we prep a chart? So we have,
E5, upside.
let's see what we can find. How do we see this thing? Let's see. We have a high here. We have a low here. This is the pop of 52.2% against a 50% decline. Okay, good.
But we need a VWAP.
So we're gonna anchored one from the top, one from this low. Okay, so we have a high and low VWAPs. Then we can draw our fibs from this swing to this high right there. Clear the ones from the bottom. We don't need those. So we're right at that 50% mark now. This is 61.8. This is 78.6. Okay. Now we're going to throw a 2-bar swing. The 2-bar swing is going to give us 2-bar swing instead of 3, where we can find a potential support. Okay. In this case, we have 115 high, 100 low, 126, 120, and then 136. We could throw a 200, which is at 110. Off the lows, weave up at 114. So it's going to be so we have a very strong support here. Price is way up here. Price is at 50% retracement from peak to trough. We know that the price can go up to 143. That will be the next handle up. And obviously 78.6 is way up there. How do we project upside? We can take a Fibonacci extension tool, run from this high to this low, this swing, and actually lines up exactly at 132. Then the next one is at 142. So we're right there on this extension. Then we'll run from here to this swing high to this swing low. Let's see, that's your zone, the one to the upside. So you just take the swing highs and lows. You see how many of them stack together between one, two points. That's how you build the zone. And once you're gonna reach there's no way that you're just gonna slice through it. You're gonna back off. Some of these fibs are very strong. So this is the upside zone for this stock to, if the price managed to continues to the upside, will be 140, 142, 143, and 146. So that's the pocket zone up there in the top against the 120 low. Okay, because this is where the swing, because of very, just because it's a 2 bar, so it's gonna change go fast because 3 is still going. 3 always gonna give you a much better read anyways. So what you do now is you take a weave up from this 120, gives you 127. So that's it. That's your chart. I mean, you can,
Nice 10-point move.
yeah, just that's, you see, like, you tell me that, I mean, I'm just taking a little bit of time. You know how fast I do it? It just, we have a chart. Now, if you want to sit here and I want to put a 1 here, I want to put 2 here, is this a 3? Is it a, I mean, what difference does it make? You want to go up, you go up, try to target this area. What it had, what if it's going to be on a wave count, it's going to be a swing count, what difference does it make? Price is price. This is much easier. It can show you any chart you want. I can just make it so fast and then just move on, you know? But this is the fifth swing
Re-
here. But as long as a swing is up, now when does the swing change? Now we don't, I mean, I know what it did, but now if he just wants to throw a colors on them, we can do it that way. There you go. This is where the swing turned direction right from here, on this bar right there. That's the higher low, and then it's a good, I think it's a, if you keep, like they're always, uh, and I always tell people to keep your technical simple. Is much better than making it all bunch of indicators and this and that. And I mean, iron prices, I remember the other day I posted this thing on this all these charts, right? They're actually forwarded here. Kagi chart, rain chart, this Heiken Ashi chart, Ranko chart, point swing chart, 3D chart, percentage swing chart. I mean, if you read any one of them, the description, every single one of them, I've been through every single one of them, anyways. But what is the number one thing that every chart tells you about all of these charts that I just showed? All these 3Ds and the swing chart, and um, the point swing chart is very useful for Elliott wave counting and Gann swing. This is what I tells you all the time. Learn the damn Elliott wave right, then the swing trading will be very easy for you. But you have to practice a lot to learn Elliott wave. If you pass Elliott wave, Gann swing is like a piece of cake. That's how I got myself into it. If you just jump on Gann, that's different. Because you're counting on the Elliott wave is very similar to Gann as well. It has a lot of, but nobody does it. No one has ever combined Elliott with Gann, but I do it. I think it's just, and I win a lot of trades, and I've done a lot of trades off that. I just showed you the example of S&P 500, 1 hour chart, a failed swing. I made that wave as a truncation. It's like, okay, let's go. Time to go. We should be good. I've been long over 2 weeks or so. When the last time you saw me buying puts? Just I trade what I see. I don't care what recession coming tomorrow and in the next hour. I care less. We trade what we see. What is gonna happen 2 months from now? Nobody knows. You know. So there's one thing here. Every single one of this chart. I mean, it depends which one you like, which suits your style. It lags. It filter out the noise, market noise. This part is on every chart. Filters out market noise. Filters out market noise. This is why I don't like noise. People talk about where we going and what we doing, because they're it's the calculation and everything is based off, it's was way different. They just like look at a generic old, like a simple chart. This is a very good chart. This I can actually this Japanese candles, the guy who did Japan's Japanese, they do, these candlesticks are all like for fair, but they're all Japanese, right? Trading, I mean, Japanese have a lot of history with the price. I mean, how with Kagi chart, same thing. So it just depends. But I mean, I have a bunch of things I can throw, but there's no point for me. Like, I have this, whatever you call a super trend or whatever, I have a buy signal here. Here, that's your buy signal trigger right there, that bar. You can follow that. I want to do a go signal. That's your go signal right there on this bar, on this chart. So you have a swing count, you can throw a couple signals on them as well, just as another confirmation, just to see like, okay, hey, am I going in a right direction? Well, that's just the algorithm, whatever the signals is giving you a hint, like, okay, hey, direction might be, is good. Now I want to see if I have a mean reversion signal. Yeah, we're a bit of a pop, but they failed. But not everything is gonna be perfect. But when that's the decisions we all make. So
Well, can you do CrowdStrike PRWD because it's already retraced while the other cyberspace are kind of sideways. CrowdStrike, the
Once
RWD.
let me remove because it's not gonna save it out of this thing saved. Okay, that's one. Wow, two go signals there. That's the swing one. Wow, I made a new high. No, it's still in one, going up. That's your wow. Man, these stuff. What was the cybersecurity stock were pretty dead. Let me hang on. What's the ETF for this? Okay, I'm gonna change this because by default is that's the bug right there. That's the ETF that tracks all the cybersecurity stocks. Oh yeah, it's been. How has it been? These cybersecurity stocks, they're basically huh, been picking up. Lost a lot of momentum here. You see, by not going up there, by going straight back. There you go. Now it took off. Crazy. Yeah, that's the strength you need right there. This is where the cybersecurity stock's gonna move big time. It's gonna be. See, it came back down. Yeah, this run cybersecurity stock is gonna cool off pretty soon. But it's a weekly rotation. It's gonna take a very long time. Keep that thing in mind. It just changes. It is gonna change a little, just slightly based on 1 week. It's just a huge. It's a big time frame. That's all. Yeah, 1 hour is. Sorry, the one day is. That one where March. It changes here when I slide that thing. It goes you day by day. Move that thing. So I'm just trying to see. Okay, so it was down here, went to lagging, didn't really went too far. See, that's what these swimmers do every day in front of me, especially on the daily, the 50 chart that I watch. And you got to be careful with rotation. These are not like guaranteed free trades. You can sit and just launch trades left and right. You gotta know where the stock is actually on the chart. Um, Same drill here. Mm, throw one from here, throw one from here, oh, throw one from here. Now, what are we gonna do? We're gonna take this high to this swing low. Okay, get rid of the top. This one. So that's this. Draw a line to this swing high, which is this. That's your first down down zone right there. That's one. Second one is going to be the same as this previous swing high, which is this 392. So this 392 and 61.8, that's going to be the second one down if it breaks, along with this weave up off the lows, which is at 390. Okay. So it looks like the stock is trying to pull back. The swing is still up. Okay. For the second swing to turn down, the swing has to turn down. Yeah, swing don't um, stays up and try to settle in two. And no, it doesn't. 3 4 days, it's gonna roll over for the stock to take a bit of a cool off. Um, okay, right here. They're all gonna be same, I know, because it's just the ETF is the one that tracks all of them anyways. Who else do we have? Um, what are cybersecurity name? Um,
Fortinet.
you is another one, right? This is cyber Unity software is cyber or no? Whatever. They're all okay. If
Unity is
you
not a cybersecurity, it's a games, it's a game software company.
yeah, like the thing is this. If you want to trade any cybersecurity name, this is an ETF that, that you need to know where it's going. It's the same thing that when we look at the SE any stock um, um, compared to the S&P, it's the same thing. It's called BUG, BUG. Global X Security ETF. It tracks all of these cybersecurity names in this ETF tracks them. If you have a read on this one, you will know where the cybersecurity world is going. Okay. It's exactly like a same chart as an S&P 500, right? Same dip. There you go. Let's prep this one. Swing is down now. Great. Yesterday because it made a lower bar. This time the ETF has rolled over already. So there's a good chance that cybersecurity stocks are starting to cool off. It's been sitting here. This is weakening. This is starting to weakening. You see that it's starting to lose a little bit of momentum now because of this ETF. You can, if you, I mean, it doesn't move much. You have to size up this trade quite a bit to um, to make money on this ETF at $30 to target 36 all-time high. Um, same thing. Now what do we do? We take this side of this low. We don't care about this unless this swing low gets taken out by the 78.6. Then we'll worry about the deeper retracement. Throw a weave from here off the low in case. Throw a 200 EMA right here. Got weave ups. This 33.24. Previous swing high 33.12. That's your zone. Right there. Gotta watch this zone. 32.95 weave up. 32.77, 50% retracement. Then you have a little bit of a of a 2.1.5 kind of point here. It will find support here most, a lot of time because this is where you have a 7%. You have the first swing up 14%, and you have a 7.1% decline. So previous swing high always acted as resistance on the support on the way down. Broken resistance, which was here, the line turns green, right? Broken resistance act as a support to the downside. Broken support here, sorry, here, act as a resistance on the way up. Okay, so it's always like this opposite. That's the bug story. Um, then Palantir, I don't really, I put it here because of you. Some of you are crazy about this stock. Palantir ended the week with an outside bar, so you gotta watch this one. Okay, it's a very kind of little funny looking chart now. The last time it made an all-time high, it ended the week with an outside reversal bar. This week, it started up another outside reversal bar. So if you look at this chart of a weekly, it's like a video game. Watch this. How the stock is trading like a crazy. The stock had a massive run all the way up to 125, ended the week with an outside bar. For the next 3 weeks, the stock was down. Put a bottom in with an outside bar, managed to rally all the way back up to 125.41. 125.25 is the high with the double top now with an outside weekly bar. These are reversal bars. So I'm gonna have to wait and see next week how the stock will trade. But is it gonna pause, put a double top here, or is just gonna make some room to the upside? That's what you're gonna watch. Okay, so now it's gonna become this liquidity zone up here up on the top. It's gonna get sweep away at one time, 1 hour, 1 day. So very last couple weeks on this stock is a very interesting price action. High, the outside bar dip all the way 47.3% dip, and then it rallied up 89.4% back to the upside. It just this these are not easy. Even the monthly last month, look at the size of this outside bar. It has a higher monthly bar, which is a good sign. It's a very good sign for the rest of the month. But just a matter of like where the stock is gonna close. I don't know. UNH, this thing is a disaster. This is what killing the healthcare right now. Look at this decline. It's crazy. Wow. I don't know. I don't think they're going out of business. It's gonna destroy healthcare sector. It is. I don't know. Insurers, pharmas, like they're okay, but these insurers are just struggling since last year. Like month after month, like look at this. Like December of last year, lower bar, inside month, outside bar, inside month, huge. Last month, that's when the took a hit on earnings. April outside, but hey, I gotta stop somewhere. I got another lower bar for this month already. We still got 3 more weeks to go. This is a giant company. This is not this is not small. It's just every day. This is the daily part. Let's see, every single day the stock is just making lower lows non-stop. It might pop a little bit. We might get a little bit of a brief the move. It's an 11 swing on a 1 hour time window anyways. You see, the count is 11. It just keep going. 9, 10, 11. I mean, it can go up to 21 like PL. You know, um, it'll get some of a bit of a pop. I don't know what the bottom is because there's no signs for it. Screw that, I'm not touching it. Um, got all these names here. Service now is fine. It's been pretty sideways. Swing is up on a weekly and daily, monthly higher bar. Swing is down in a monthly time frame because you see it took a 4 months of of the lower lows. Shopify. These are all the stocks. Basically, we I have them all here. A coin ended the day with an outside bar yesterday and the week. Oh boy. Yeah, they had those earnings, I know. Yeah, these are very, they call the two-in-one bars. Very tricky bars. I'm watching this one, Abby. Um, the monthly swing is down, okay, because it took 1, 2, and 3 months of lows and a one single bar. Even the fact it did manage to close up here, but the 1 month, which is the last month, it took a mass because remember we're looking for 3 bars, right? We need 3 lows. So it took 1, 2, and 3. One single month took up 3 months, wiped off three months in one shot. That's just brutal. And now it's an inside month. So I'm watching. I really like this company. Um, see what I mean. We'll see. I mean, this is tough to fight. I need, you know, plus 1 hour is down here as well. So I watch. I'm watching this one, AMT again. You see, like all the it's gonna take this the the beating the market took in March, April. It has literally turned every monthly, but the swings are down. You know, every one of them. Look, Tesla down. So if you're looking, let's say, like it's gonna take time. You know, because what you're looking for is you need 2 more months of higher bars to turn the swing back up. 2 months. So keep that thing in mind. See, weeklies are just go week by week, and dailies obviously, based on 3 days. It's gonna take time. See, Nvidia monthly swing is down. Weekly is down as well. You know, Apple monthly swing is up. When Apple needs to fight the Apple needs to break 225 this month. It's very important for Apple to break 225. Counting this thing. Oh, it's a 3 bar. And that's what I was like. Why this thing is that was a 2 bar? That's what. Netflix up, up, up. That's a strong one. There's no denial. Netflix is good. Microsoft monthly is down, weekly is down. Only daily is up. It needs one more week of a higher bar for this thing to turn back up. You see, like the point is like if we draw time, bright, that's what I don't know. I mean, I'm looking at I'm just trying to calculate time. I don't know. We just gonna. I don't know. We just. I think that we're just gonna have a flat year. To be honest, I just don't. It's a very hard case to make. I don't. Things can change rapidly. I understand. I'm fully aware of that. To make the case for this 22% rally every year, this is the only thing that kind of putting a lot of, I don't have any doubts, but kind of like this. This is a chart. This is all you need. This is all you need. They're making a case here for a high inflation is gonna, but you know, like, okay, he's trying to make deals, right? He's open to make deals. And at the same time, they're making it sound like that all of these store shelves going to be empty. Containers are, they're not coming in and this and that. I don't know. It's just the damn media and some people are just like always gonna make it sound like the world is coming to an end. It's just the question. I don't know. I mean, the thing is like these runs, they're back to back. Do we make a case here for 22? That's what I'm debating right now. I mean, this is what we're looking at from COVID lows. So when, I mean, yeah, we got a setback of 21%, which is it triggered really, really fast compared to we had 27 before. So it just some people just need to relax, to be honest. It just, I don't know about 22, but it's just a matter of, I mean, if I have to make a case, that would be the bare minimum upside I would put a price tag on for now, just a 65. If the price breaks above the 61.47 all-time high, that will be a V shape, full reversal. That'll be exactly Trump 1.0 at COVID will be 2.0. Because a lot of time at the same time, there's everybody right now, okay, is looking at this zone. They're thinking this thing is gonna fail like this. It can, but then you just have to go back to your Mag 7s that all pretty much those stocks is gonna go come back and retest those lows right after earnings. Something has triggered like really good in the market to make that case. I don't know. If you have an idea or something, let me know. I don't know if I'm missing something, but I don't know. It just to me is like if if I a flat year would be like this. But your wire is going to be shorter anyways. This is the flat here. SGW, X. Now we'll take a three leg down in Y, and then we'll bounce back up in another three form to end the year. It'll be a flat year. So basically, all year long, you just trade in a bunch of zigzag moves. No growth. This is what you call a flat growth for the year, going into a complex correction. Because of all it does is because it has a bunch of zigzag moves. So you're giving up, you're giving back, but you're gaining right back up as well. It's a weekly chart anyway, so it's gonna take. It will be a flat year. Because the thing is this, if you happen to go like this, and then you go do this, there is not a chance in hell that this five wave decline is going to go another five up like this within the same year. I will write that thing down on a piece of paper and I can sign it. There is not a chance the S&P will drop five and go right back up in five. It will never happen before. You show me this on S&P, I'll give you all the credit in the world. Show me this thing on S&P 500 last 50 years on a one chart. Five straight wave decline with exactly a five wave move to the upside. Show me somewhere. I dare challenge you. It can, but it will not because your W is already extended. When you have an extended W, you have a shorter Y. When you have a smaller W, then you have an extended Y. Complex is very tricky. Very, very tricky. But that's just, again, you're just thinking that's what's going to happen. Doesn't mean that it will. If I have to make a case of a flat, meaning a slow growth, that the market just has to take a pause, take its time to, because of this part of the negotiation with tariffs, things like this. Okay. If I put these two things together, because this is the early, because he's saying the same thing as well, that this is the beginning. We're trying to adjust everything, and then we're just going to take off. Right? This is what he's been saying, the same thing. Because you have to understand, look where he came in the office, right here. This is where he entered the office. And we as all being, all bullish people who wants to buy stuff all the time, which is fine, that instantly that he comes in and the market already has 2 years back to back 22% upside with no new policies in place. Okay. The last 4 years, he came here, rallied, gave everything back, and then ripped everything back up. And he took over here right at 200%. At least he came, we're coming off from this COVID. So Fed was in big time. So he stayed in. Biden took advantage of the whole thing when Fed was in. Inflation triggered with all the money printing. Now we got the slow drip. And then finally from here, market recovery comes the AI boom. Market just kept on ripping. The point now is this. I don't know, like you need a 10-year chart or you need a 15-year. I don't need none of those. I don't need a 10-year-old chart to trade what I'm trading. I'll find you five different patterns on a 5-year time window that will repeat at the same time. It's just market is just literally repeating exactly the same term that he had before. President he was in. It didn't happen when he started, but it happened before he left. Bear market. He left. He came. Bear market. He came right here. I mean, yes, this is definitely a 100% official bear market. Anytime you break a 20% threshold from peak to trough, that's a bear market. It's the official bear market. But again, that was what 37-hour recession, I believe. Call it like whatever. And that's it. And here we are. I think market just gonna buy time. And I mean, next month we're gonna be halfway through the year. It's crazy how fast this time moves, man. It just Yeah, I think this year it's just all about dip buying for real. That's all I see it. I think price is gonna range bound. I'm just I'm just looking at here. Okay. I mean, it has to like these stocks, which are like taking Apple and all the other stock has to at least go and break even, like Meta first, and then from there it has to go up in green. Think about it. Yeah, this market, the price is gonna stay range about right there. As your full years right there, back to back. That's the best way to look at them. This month we're safe. I I can tell you that. I mean, that's how I see it. We're gonna be okay this month because I don't see the previous 3 months that is not gonna give you a one positive month here. No, not just. Just look at the quarter. I mean, we just reversed everything. What was in the queue? I mean, we're down way, like we're nasty. It was. It just look at just what the reversal is of the same bar last month. I mean, I don't like to. I mean, I look at price is price on a chart. We all see it. You can see it. I see the same thing as well. But I try to connect the data. It's just, and then you just have to calculate the time with it. I don't know. I mean, V shape, okay, fine. You go and hit the top, okay, and now you have to make a room to take out the high. When you want to end with another double top, you know. Yeah, this is, as I said before, if if this is gonna be a small, gonna be a growth, I don't even like this X, man. It's too damn big. It has to end here. It has to go something like this. And then from here rallied up another five or three, which is not, it's gonna be a three because these are weekly bars, which is gonna run out of time. So if that's the case, just just gonna be in a trading zone and and just stay range bound. Complex is the slow growth. I will guarantee you that. It's just to me, market just going is in a distribution phase after accumulation run right there. This is going to be a distribution phase for the market. So I'm looking at a bunch of stocks as well. It's tough. You know, I'm not, I mean, I want to stay bullish. Don't get me wrong. I mean, but I'm a buyer on dips. I think this policies and everything will take place in a couple months. Everything will start moving back up because everything right now on these earnings are just companies that just clueless right now. They don't even know what to do and they're just not even given any, haven't not given any guidance. So we're buying stocks and we don't even know their guidance for the next quarter. You know, like looking at sectors, utilities is the one is leading the pack, 6%. Industrials 3, financials 3, 2.93. Um, I'm just, I mean, if you, I don't know. Hold on, I'm gonna check something. Where's my okay. Here we are in 2025. This way. Look at the industrial 16, 15, 9. Financials was pretty strong last year. 3. Huh. Huh. Watch what happens. 1, 2, 3, down. 1, 2, 3, down. 1, 2. Oh, I mean, between it came energies all over the place. Healthcare down. 1, 2, 3, down. 1, 2, 3, down. 1, 2. This is the real estate. 3 down. Huh. 1, 2, 3. Industrial down. 1, 2. You see? Yeah, I mean, so now if we take 1, 2. See, it's kind of flat. 1, 2, 1, 2. See, when you have two down quarter, yeah, 2 is the number to the downside. Yeah, no, like if I show you here's a quarter. Yeah, you have A back-to-back quarter, 2 quarters in a row. Yeah. Oh, this is not what just this. Oh, I need to update this. The years are old. Yeah, this is old. I gotta change all these dates. Okay. The 2020. I'm gonna save this one. Okay, this is the current one right here. Okay. Oh, as a matter of fact, I have in dork here. So we have healthcare, which has a swing down. We have real estate with a swing down. Boy. We have communication now with the swing down. How is it down? Something is not right. Um, man. And I was trying to mess around with that thing. The whole thing got changed now. Oh man, I hate it. Hang on for a second. Come on. I was messing around. Okay. Zero default, fine. Zero default. Fine. Yeah, that's what I need. Yeah, these. I gotta save this. Okay. This is down, I know for sure. This is down. This three is. Oh, oh. Oh, okay. I was counting that inside the material. Energy is up. Yeah, this is what I was saying. It's just, I don't know. Here's a weekly rotation, you know? The only sector on the coming weeks, whatever the dip buying is gonna be, is this the XOK and XLY. It's the tech. But if you look at the again, this is gonna take a long time. This is not this is a weekly time rotation that takes a long time. If we go back here, let's go start of the year here, January 3rd, and watch three of them, which are the most important ones: technology, sorry, four: financials, communication, and consumer discretionary. Okay, these four is where all the big names are, you know, stocks, big, heavy hitters, like they're all in four sectors. So you have to watch this one. Let's see how we started this year. This is where we ended we ended the year here, right there. So the week was ended. And we enter a new year. So it just changes every week. See financials right there. You see what happens? Financials were weakening and now they're turning back up. Look how technology took that turn, man. Crazy. That's what the sell-off triggered. Watch the XLY right here. Taking a wide turn. It's just because of that Tesla. The punishment that Tesla took that drags the XLY with it. Look how all the other ones are going. Look how disconnect, because all that's the problem. That's the issue. The market, all of these big names are just sitting on this on separate sectors. It doesn't go all of them in one chart. You see, here goes technology along with the XL. Now XLY is taking a much wider turn compared to a technology. Look, communication still fighting because of the meta and financials. Financial is due for this rotation. You see, because what happens is when you have a leading um, quadrant here, you can only go clockwise. Okay, but there's a lot of time you see financial. Watch financial. You see financial comes down and forms a hook right back up. It's supposed to complete the rotation, but it didn't. It went right back up, and now you see, now it's turning right back down. Now it's here. It ended the week yesterday, right here. Financials, there's some weakness coming in financials because it has to complete this rotation. It's going to take time. Because when you have a rotation here, it's the same thing happens here. When you have a price momentum which is here and it turns down like this, instead of completing the rotation and it just forms a hook right back up, which is a bullish because of the price is an uptrend and the price is going to push more. You see what happens here, but then it's going to go this way. Sooner or later, okay, the rotation has to complete and run its course. There is no way out that you're just gonna stay here forever or you're not gonna move. You will. You're gonna run your make your course like everyone else. Now let's look at technology right there. So we go back here, here, too much here. You can just do one by one. Here, so here's technology. So it went up. It comes on here, 228. Here comes that March. So technology, boom. See? This rotation looks pretty damn good for the coming weeks in tech. Buy the dip, man. Just that's the only thing I can tell you. Just buy. If we're gonna have down sessions, I'm not gonna be. I wouldn't be surprised to see it, but I would definitely buy the dips. I think these dips this year is gonna pay out big time next year. So we're just right here. So it was here, didn't really stay too long. Now we go back this. Look at this. It's right behind it. This is where we have this Amazon and Tesla. And, there you go. This is exactly what I wanted to see. You see? I could change that S&P the right way. You see right there? This is a weekly rotation. It's gonna take time though. Just keep that thing in mind because this is the week we just ended. This is the previous week. The little dot right there. There's the one before. There's one before. So there's 1 month. 1 week, 2 weeks, 3 weeks, and four. So the full bar will make it 1 month. So then um now if you look at a daily time frame, look, see, XLI just dead right there. You know, see, you have something like this sitting that close, just don't have any alpha. That's the damn problem. It's so difficult to find a trade to fight it out. Just to cannot find any alpha. Which I have it all here anyway. So it's just all here. It's what I watch all day long. Okay, I'm gonna stop this recording. Run some scans. Let's see.